Something extraordinary is happening in the Philippines. Once a minor player in Southeast Asia's energy sector, the country is now making headlines with a dramatic transformation. The oil and gas industry here is now valued at nearly $15 billion, a leap that's turning heads across the region. The Philippines is positioning itself as a critical hub for energy processing, storage, and distribution. The implications are enormous, not just for the Philippine economy but for the entire region. International analysts and investors are scrambling to understand the forces behind this boom. The scale of this transformation is best seen in its flagship projects and the global giants now investing here. This is a story about more than just oil. It's about a nation's bold gamble on its own future. The shockwaves are just the beginning. The world is watching as the Philippines steps onto the global stage. The figure that captures everyone's attention is $15 billion, the current valuation of the Philippine petroleum industry. But what does that number really mean? It signals a vibrant, expanding market hungry for energy. The country's economy is booming, with new factories, businesses, and a growing, more prosperous population. This growth has created a significant energy gap. The Philippines consumes around 471,000 barrels of petroleum daily, but produces only 23,000. To fill this gap, the nation imports roughly 170 million barrels of crude oil each year. This reliance on imports is why the government and private sector are investing heavily in downstream infrastructure. They're building the capacity to refine and process oil at home, turning a vulnerability into strength. Infrastructure projects, roads, bridges, airports, are massive consumers of fuel, driving up demand. The transportation sector alone accounts for over 70% of all petroleum demand. This creates a self-reinforcing cycle. Infrastructure fuels the economy, which drives energy demand, justifying further investment. The $15 billion valuation is projected to climb to over $21 billion by 2032. This is based on solid economic fundamentals, not wishful thinking. Storage capacity now exceeds 30 million barrels, and pipelines stretch over 5,000 kilometers. The numbers tell a clear story. The Philippines is building a long-term, sustainable energy powerhouse. This is not a fleeting moment. It's the foundation for a new era. The groundwork is being laid for lasting growth. The energy sector is set to power the nation's future. At the heart of this revolution stands Petron Corporation, led by Ramon Ang. Petron is the largest oil company in the Philippines, operating the nation's most advanced refinery in Bataan. In 2024, Petron captured nearly a quarter of the domestic market, with sales volume up 10% to nearly 140 million barrels. Revenues soared, but challenges like global price volatility and a temporary refinery shutdown in Malaysia tested the company. Petron is raising up to 25 billion pesos through retail bonds to fund further expansion. The landscape shifted dramatically in February 2025 when Saudi Aramco entered the Philippine market. Aramco acquired a 25% stake in Unioil Petroleum Philippines, signaling a major strategic move. This isn't just a business deal, it's a statement of intent. Aramco brings immense capital, technology, and operational expertise. Its arrival is expected to supercharge the local industry, raising standards and increasing competition. This healthy rivalry will push all players, including Petron, to innovate and become more efficient. For the Philippines, Aramco's presence validates its strategy and elevates its status. The nation is now a premier destination for major energy investments. The partnership marks a new era for the industry. The Philippines is firmly on the global energy map. The real driver of the oil boom is the nation's insatiable thirst for energy. Cities are expanding, industries are growing, and people are aspiring to a better life, all of which require power. The daily demand for nearly 500,000 barrels of petroleum reflects this ambition. A critical shift is underway. The depletion of the Malampaya gas field has forced the Philippines to import liquefied natural gas, LNG. The first LNG import in 2023 marked a new era. The government has approved several new LNG terminal projects, essential for energy security. Natural gas now fuels around 3,500 megawatts of capacity, providing cleaner, more stable electricity. Securing LNG is crucial for national growth and development. This transition runs parallel to the oil refining boom. By investing in both oil refineries and LNG terminals, the Philippines is diversifying its energy sources. The country is building resilience and reducing reliance on a single source. This strategic foresight underpins its transformation into a regional energy hub. The nation is taking control of its energy destiny. The energy boom's impact goes far beyond corporate profits. It's creating thousands of jobs: engineers, technicians, construction workers, and more. These are long-term careers providing stable incomes for Filipino families. Investment from global leaders like Aramco brings advanced technology and knowledge transfer. Filipino engineers now work with state-of-the-art refining processes and digital systems. This technological leap fosters innovation and excellence. Local businesses are thriving, providing services to the energy sector and benefiting from the economic ripple effect. The money earned in the oil industry circulates in communities, supporting small businesses and creating more jobs. This is how a single industry can drive broad-based economic development. The sight of new facilities and world-class companies inspires national pride and optimism. More young people are pursuing careers in science and engineering. The energy boom is lifting the nation's confidence and ambition. Oil in the Philippines is more than just fuel for vehicles. Petroleum products are vital for the electric power sector, the fastest-growing segment for petroleum use. Fuel oil and diesel generate electricity for cities, industrial zones, and especially off-grid islands. For remote communities, diesel power plants are often the only reliable source of electricity. These generators power homes, schools, and businesses, enabling access to healthcare and communication. Even in grid-connected areas, oil is crucial for backup power. In 2023, businesses added 600 megawatts of backup generator capacity. These systems ensure factories and critical services stay online during outages. The sector is growing rapidly, with a projected annual growth rate of nearly 6%. Oil remains essential for stability and reliability as the country develops. It's a hidden backbone of the modern Philippine economy. The Philippine oil boom is evolving beyond fuel. The country is moving into petrochemicals, chemical products derived from petroleum that are the building blocks of countless everyday items. This step up the value chain allows the Philippines to capture more economic value from every barrel refined. Petrochemicals are vital for industries like pharmaceuticals and cosmetics, which had a combined market value of over $12 billion in 2023. By developing its own petrochemical capacity, the country can produce high-purity feedstocks at home. This reduces import costs, strengthens supply chains, and boosts competitiveness. The Philippines could become an export hub for these specialized products in Southeast Asia. The growth of the petrochemical sector signals increasing sophistication and resilience. The country is building a more complex, integrated industrial ecosystem. It's transforming oil into the building blocks of modern life. The Philippine oil and gas industry is shifting Southeast Asia's energy map. The country is emerging as a new center of gravity, with growing refining capacity and a strategic location. Saudi Aramco's investment is a vote of confidence, suggesting the Philippines could become a key hub for refining and distribution. This could see the country evolve from a net importer to a regional processing and export center. The rise of the Philippines increases competition, driving efficiency and innovation across the region. For Southeast Asia, a new major supplier means greater price stability and more secure supply chains. The transformation is about more than economics. It's about geopolitics. A strong energy sector gives the Philippines greater control over its destiny and a stronger voice in regional affairs. The country is becoming a critical partner for global powers and a key player in ASEAN. The oil boom is fueling the nation's rise on the world stage. The horizon for the Philippine energy sector is bright. The $15 billion boom is just the beginning of a much larger journey. The challenge now is to sustain momentum and manage growth wisely. Continued investment in technology and workforce development is essential. Strategic partnerships, like those between Petron and Aramco, will accelerate progress. These collaborations bring together local knowledge and global expertise. As the industry matures, expect more partnerships in oil, gas, and renewables. The goal is a diversified, resilient energy system, powerful and sustainable. The oil boom can fund the transition to renewable energy, ensuring long-term security and environmental responsibility. The Philippines is poised to become a true energy titan. This transformation can create a more prosperous, technologically advanced, and influential nation. With bold vision and strategic investment, the country is forging a new destiny. The future is bright, powered by the new energy titan of Southeast Asia.